As we step into the second half of 2025, the cryptocurrency market is buzzing with a renewed sense of energy and confidence. The month of June concluded on an exceptionally strong note, washing away much of the uncertainty that marked the earlier parts of the year. This positive shift has reignited investor enthusiasm, creating a palpable sense of opportunity across the digital asset landscape. The total market capitalization now stands impressively at over $3.42 trillion, a testament to the capital flowing back into the space. This isn't just a fleeting moment of excitement, it feels like the beginning of a more sustained and confident market phase, driven by concrete developments rather than mere speculation. The overall mood is best captured by the Crypto Fear and Greed Index, which is firmly settled at a reading of 70, signaling greed. This indicates that investors are more willing to take on risk, expecting prices to continue their upward trajectory. The sentiment is a stark contrast to the cautious atmosphere we witnessed in the first quarter of the year, which was characterized by volatility and hesitation. Now, discussions in online forums and among institutional analysts are less about potential downturns and more about which assets are poised for the next big move. The market has found its footing, and the collective psychology has shifted decisively from defensive to offensive. This reinvigorated optimism is not built on sand, it is supported by a series of positive catalysts that have aligned to create a favorable environment for growth. The strong close to June was not just a technical rebound but a reflection of improving macroeconomic conditions and significant progress within the crypto industry itself. Investors who weathered the earlier volatility are now seeing their patience rewarded, while new participants are being drawn in by the promise of a burgeoning bull market. The air is thick with anticipation as market participants eagerly watch to see if this momentum can carry through July and beyond. Looking ahead, the foundation laid in June provides a solid launchpad for the weeks to come. The market has successfully absorbed previous selling pressure and established higher support levels, creating a more stable base for further advances. The narrative has shifted from recovery to expansion, with investors actively seeking out new opportunities rather than just protecting their existing capital. This renewed confidence is the essential fuel for any bull market, and right now the tank appears to be full. The stage is set for a dynamic and potentially very rewarding month for the digital asset space. One of the most significant tailwinds for the current market rally is a calmer geopolitical landscape. The recent reports of a ceasefire between Iran and Israel have sent a wave of relief through global financial markets, reducing the overall risk aversion that often suppresses asset prices. When global tensions ease, investors are more inclined to move capital into higher growth, risk-on assets like cryptocurrencies. This broader market stability provides a secure backdrop against which the crypto-specific drivers can truly shine. The reduction in macroeconomic uncertainty allows market participants to focus more on the fundamental strengths and technological innovations happening within the digital asset ecosystem itself, rather than being distracted by external shocks. Another crucial pillar supporting this bullish sentiment is the relentless and growing wave of institutional investment. The approval and continued success of spot Bitcoin and Ethereum ETFs have opened the floodgates for mainstream capital. On the final day of June alone, spot Bitcoin ETFs saw net inflows of $102 million, marking 15 straight days of positive flows. This consistent demand from large-scale investors like those using BlackRock and Fidelity's products provides a steady buying pressure that supports prices and builds market confidence. This isn't just hot money, it's a structural shift in how traditional finance views and accesses digital assets, suggesting a long-term allocation strategy is at play. Alongside institutional adoption, a more constructive regulatory environment is taking shape, further bolstering investor confidence. The industry is seeing signs of a move toward clearer guidelines, which reduces the ambiguity that has long plagued the market. A landmark development is Circle, the issuer of the USDC stablecoin, filing to become a U.S. national trust bank. This move signals a future where digital currency issuers can operate within the established financial system, bringing greater legitimacy and security to the space. As regulators work toward creating frameworks that foster innovation while protecting consumers, the risk of sudden disruptive crackdowns diminishes, making the sector more attractive for long-term investment. Finally, the combination of these factors creates a powerful, self-reinforcing cycle of growth. Geopolitical calm encourages risk-taking, which leads to more institutional inflows. This influx of capital, in turn, demonstrates the market's maturity to regulators, encouraging them to develop thoughtful and supportive policies. This virtuous cycle is what underpins the current market structure, making it feel more robust and sustainable than previous rallies that were often driven by pure retail speculation. The foundation is stronger, the participants are more sophisticated, and the regulatory path forward is becoming clearer, all of which contribute to the profoundly positive outlook for July 2025. Bitcoin, the undisputed king of cryptocurrencies, has been leading the charge with remarkable strength. It closed the month of June at a record monthly high of $107,100, demonstrating immense buying power and breaking previous resistance levels with conviction. Throughout the month, it even flirted with the $111,000 mark. As we enter July, BTC is trading steadily around the $107,100 level, consolidating its recent gains as it prepares to challenge the next major psychological barrier at $108,000. This price action is incredibly bullish, showing that every minor dip is being met with strong buying interest, preventing any significant pullbacks and maintaining upward pressure. Technical indicators are painting a very optimistic picture for Bitcoin's immediate future. The asset remains comfortably above its 50-day exponential moving average, a classic sign of a healthy uptrend. Furthermore, key moving averages across all significant timeframes are signaling a strong buy, indicating that momentum is firmly on the side of the bulls. Experts are watching support levels between $105,000 and $106,000, which are expected to hold firm, with resistance at $110,000 and then $115,000. Analysts are forecasting a potential push toward $135,000 in July, supported by historical data showing the month is often positive for BTC and continued accumulation by large-scale investors or whales. While Bitcoin soars, Ethereum is exhibiting a more measured and cautious pattern of consolidation. It is currently trading around $2,462, hovering just below a critical resistance zone between 2,500 and 2,600. This area represents a major hurdle for the second-largest cryptocurrency, and a decisive break above it is needed to unleash the next leg up. The price action suggests a battle is being waged between buyers and sellers at this key juncture. While the mood is one of cautious optimism, the momentum is not as strong as Bitcoin's, as reflected by a neutral relative strength index reading near 47. Despite the consolidation, the outlook for Ethereum remains constructive. The asset is holding above its 100-hour simple moving average, which is a favorable sign for buyers looking to build positions. Key support is found around 2,320, which would need to hold to prevent a deeper retest of June's lows. If the bulls can regain control and push through the formidable 2,600 resistance, analysts have set a potential July target as high as 2,800. The performance of spot Ethereum ETFs, which are also seeing inflows, will be a critical factor in providing the necessary buying power to overcome the current stagnation and follow Bitcoin's lead. While Bitcoin and Ethereum capture the headlines, a vibrant and dynamic ecosystem of altcoins is also showing significant promise. As capital flows into the market leaders, it often spills over into smaller cap projects, a phenomenon that traders eagerly anticipate as altcoin season. Several altcoins are being closely watched by savvy investors and whales. Projects like Hyperliquid, Arbitrum and Sky have already posted impressive gains, with ARB surging nearly 40% in the last week of June alone. Others, like XRP and SUI, are showing technical patterns that suggest major breakouts could be on the horizon, promising substantial upside for those positioned correctly. The current rally is not just about price movements, it is also defined by powerful underlying narratives and technological trends. The convergence of artificial intelligence and crypto is a dominant theme, with projects like Fetch.ai poised for a potential 40% rally if the AI narrative continues to gain traction. Decentralized finance is also experiencing a resurgence, with total value locked growing across major platforms. Furthermore, the tokenization of real-world assets is gaining serious momentum, bridging the gap between traditional finance and the blockchain. Innovations in Layer 2 scaling solutions, particularly on networks like Solana, continue to push the boundaries of what is possible in terms of speed and efficiency. However, it is crucial to approach this exciting market with a healthy dose of caution. The cryptocurrency market is notoriously volatile, and the current bullish sentiment does not eliminate risk. Sudden price corrections, often triggered by large-scale profit-taking or unexpected negative news, are always a possibility. Regulatory developments, while currently trending positive, could shift unexpectedly and impact market sentiment. The very greed that fuels the rally can also lead to over-leveraged positions and sharp, painful liquidations if the market turns. It is essential for every investor to be prepared for this inherent volatility. In conclusion, while the outlook for July 2025 is overwhelmingly positive, the timeless principles of prudent investing remain paramount. The key to navigating this market successfully is to stay informed, continuously research the projects you are interested in, and never invest more than you are willing to lose. Pay close attention to market news and be mindful of your own risk tolerance. By balancing optimism with caution, investors can position themselves to capitalize on the incredible opportunities presented by this bullish surge, while protecting themselves from the inevitable risks that lie ahead on the path.